Welcome to another video here on the L.E.A.R.N Grow Invest channel. I'm Jermaine, CEO and coach here at L.E.A.R.N Grow Invest Limited. Today we're going to be talking about 138 student living. Press release was released a few days ago on the JSC about them seeking to raise additional funds. So the first thing we're going to do is read through the notice, and then we're going to have a good friend of the channel, Ryan Strachan, share his thoughts on some of the things that might come up around that notice. So not in an effort not to give anything away, it should be a great discussion. Ryan is no stranger to our platform. So, hope you enjoy this one. Let us know if you have any questions in the comments or in the chat. We're going to get started right now.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, so welcome back. Let us pray. Thank you, Lord, for this day and for the ability to produce wealth. We pray, Lord, that this will be a meaningful discussion, one that is informative to those who will hear it. And we just thank you, Lord, for this community in Jesus' name. Amen. All right, so I'm going to go right into it just to give you some context about, what we're talking about here today. This notice that I'm reading from is in the description, so you can get some more information about it. So this was released February 9th, so that was last month, well, almost a month ago. So it says 138 Student Living advises that the board in a meeting held on February 7th has resolved that among the resolutions to be considered and voted upon by shareholders at a specially convened EGM are the following. 1, that the authorized share capital of the company be increased from 480,500,000 ordinary shares at no par value and 94,500,000 cumulative redeemable preference shares to unlimited authorized share capital. 2, that the company be and is hereby authorized to issue up to 775 million ordinary shares by way of an offer for subscription to the public pursuant to our prospectus. That means we're going to get a prospectus for an additional public offer in lieu of a rights issue to existing shareholders. 3, that the board of directors of the company and or any duly appointed committee of the board of directors be and is hereby authorized to determine in their discretion any terms and conditions relating to that additional public offer. 4, that any preemption rights to which the existing stockholders may be entitled, however arising, be and are hereby disapplied for the purposes of the APO. And finally, that all ordinary shares issued in the APO, once issued and allotted, be and are hereby converted to stock units, right? And the rest of it says here, we write to advise that the 138 Student Living Board met on Friday on February 7th, 2023, and as was previously notified, discussions were held with their financial advisor, GK Capital, to discuss various alternatives open to them. From those discussions, the board decided to undertake an equity raise by way of an additional public offer. And most importantly here, it says this will allow the board to achieve its primary objectives in this equity raise of securing the targeted capital at a favorable valuation, whilst giving the stockholders an opportunity to further participate in the growth of the company. In addition, traded shares will become liquid in the market, commented Mr. Ian Prasad, chairman of 138 Student Living. Right, so that's your context, and we have Ryan Strachan here joining me to just talk about this. So welcome, Ryan.
Thank you. Thanks for having me.
Yes, thank you for being back. It's been a year. I remember our last conversation was investing to build wealth right around this time last year, actually. So thank you for being back. So any initial thoughts or comments on that notice? Anything that maybe was there that you may want to give us some color to before we start talking?
Well, first, I mean, congrats on all the work you guys are doing.
Thank you.
Calls and a series of initiatives that help to build our market. So I can tell it's not been a year that's been wasted, which is great.
Yes.
And keep it up. As far as the notice goes, I think it's relatively self-explanatory. A release came out afterwards, which stated that their EGM is expected to be it's actually set for the 20th of March, which is when the resolutions were put to the shareholders for their agreement or their ratification or ratifying, however it's best described. So as far as anything else is concerned, I kind of wait until that comes out. But I guess the essence of it is the board in their wisdom have engaged a financial advisor to assist them in raising funds to meet some objectives they have in mind strategically. And I think the broker was very happy to be of assistance in that respect. Should the shareholders approve, that is.
Yes, because all of this is pending at this point. Nothing is written in stone. It's pending, still pending another level of approval. It's only been approved by the board thus far, right?
Correct. But
All right.
it still has bearings on the future of the company, whichever way, it's the decision goes.
Okay. All right. So give us a little bit of the history in terms of 138 student living, so they have been listed for a few years, but for those who may have never heard about them before, tell us about them from maybe them listing until now.
Right. Okay. So I don't remember the exact year they listed. I think they may have listed sometime between 2014 and 2017, maybe somewhere in the middle of that. It eludes me right now. JMB did the IPO. They raised some money with the purpose essentially being the formalizing of the provision of student living or student accommodation. Now, at the time, you had the halls of residence at UWI, which had served this purpose and still exists, right? You still have Preston and Rex Netherford Hall and a series of others. I didn't go to UWI, so I don't remember the name so well. But I used to visit. My brother used to be on Preston Hall. Anyway, so, and then obviously with the shortfall in housing accommodation on site, you had the real estate being developed in surrounding areas, both Mona in the south, relatively speaking, and going towards like Ellison Flats and that whole area, that whole circumference for the purpose of accommodating students. It became evident, I believe, to the founders and the initial shareholders and directors that there was an opportunity for the provision of formalized student housing for those, for a captive market. And the concept was born. They would have raised capital through the equities market, debt market. As I said before, JMB listed them with the intention, and they had the intention of erecting, I believe it was 3 towers. And to date, I believe they've done 2. The take up or inherent in it as well in the agreement was a concession of 10 and 90% occupancy indefinitely, really, with the towers to revert to their ownership after a minimum of, I believe, 30 years, the ownership of UWI. So UWI would essentially take ownership of the towers after 30 or 40 years. The number is somewhere in that region. So in exchange for that, then they would guarantee them 90% occupancy, which essentially would provide comfort for both the persons taking on the risk and comfort for UWI as well, because they be inheriting this multi-billion-dollar asset and thus increasing their complement of accommodation offered on campus. So the company 138 at the time had some projections which included a dividend payout of 75% of profits. It had revenue projections. It had a whole revenue and expense profile in terms of their projections and a balance sheet as well. So those would be in the prospectus. I don't want to speak to that as much because it's easily researched. I think there were some hiccups initially in terms of, I think the newness of the concept. You have to remember, this is entrepreneurship at its optimum. It's a concept designed from scratch, funded in large part externally, and then capital goes into the ground, build a tower, and you're hoping students will come. Now, the rate of take-up perhaps may have lagged projections a bit, but by 2019, they had hit that number. Now, stick a pin. There were two major, I would say, transactions that would have occurred at different times. One, there was a sale, a relatively substantial ownership sale in 2018 of about 22%. That brought a new major shareholder to the table and some adjustments to the board composition. So I would leave your audience to go and do research on that. Maybe a couple of years before that, there was another one, which again would have resulted in an adjustment in the shareholdings, the major shareholdings as well. And again, board composition as well. Interestingly, both of these players were significant institutional investors with the kind of capital that could propel a venture of this nature forward. They would have had an interest in it because of the dividend yield it was projected to provide. So right away, you start to see the kind of appeal and the quarters they would have found appeal in. Anyhow, COVID comes, derails things to an extent, but remember, the revenue is guaranteed at 90% occupancy.
Yeah.
So the revenues would have been constant, but then the balance sheet was showing a receivable because everybody would have had their own cash flow challenges at the time and inability to pay, I suppose. No, we're at this point nowhere, having gone through the teething pains, having gone through the listing and the raising of capital and preference shares and debt and equity raise and ownership recomposition. We've seen them go into the short-term rental market, which now, for purpose of this discussion, I think a room rents for about 60 to 70,000 Jamaican dollars a month. Short-term rental is about 80 to 100 US dollars a night. So short-term rental proved to be a welcomed and unprojected addition to its revenues. And that was almost like, and that payment wouldn't have us carried as many receivables because short-term rental, like you pay before you come and then you go church groups, athletic groups, etc. Now they find themselves at the point where they have considered or thought it fit to raise additional capital in the equities market. At the time when I believe this venture was considered, interest rates were at an all-time low for a series of years. Right now, we will see interest rates going up. That could have played a part in the thinking as far as their desire to tap the equities markets at the time. Perhaps within the model, there could be an attractive dividend proposition. They just paid their first recently. I think the yield would have come out at 2-point-something% off, and that's off one payment. So testing the waters to get to see what kind of appeal within a particular market seems to be behind their thinking, and interesting opportunity.
All right, thank you so much for that background. I think as you're going through it, definitely it maybe makes sense for us to do a full review to give our audience, all that background that you just gave us, filling in those details. So we just might do that in terms of the considerations, because this discussion is really centering around just a few key questions. What are the considerations a company like this would go through when they're thinking about raising funds, right? So kind of walk us through, based on the number of deals you've worked on, what's on the table, right? A company has a need, has an objective, what's usually that roadmap that one would look at to determine, what to do?
Okay, so in any deal you do, any transaction, retail meaning one-on-one investor, company, driven by the need. That's where it starts. The client's need. What do they need? So a company at this time coming to market would be in need of capital. So if there's only so many ways you can raise capital, right? You can issue a preference share, you can have debt, you can have private equity injection, you can have venture capital, angels, blah 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 blah. They're listed, so it was really going to be a preference share, bond, convertible note. I think we've seen one of those out. They could have done an APO or a rights issue. So by virtue of knowledge of the business and familiarity with the thinking of the leaders, one can reasonably surmise what may be in line with their thinking or not. So they've mentioned an APO, so then it's a matter of equity capital, right? Now, the thing is, and the thinking is, again, it's very early, so anything can happen, anything can change. You're not bound to a particular course of action. But in pursuing equity capital, perhaps it was thought that, well, we may not have an anchor investor and we want to spread things out a bit. We want to take into consideration the environment. No, rates in Jamaica seem to be slowing. We think low relative to what company of this nature is set to offer. Perhaps the possibility exists that the student housing is viewed as a very stable offering. I mean, yes, we hear that enrollments are down 6% or so, but that's COVID and economic difficulties. But I don't think UA has ever had an issue attracting students. So perhaps the thinking in line with the needs was, well, having considered all of that, the best means of raising equity right now is an APO. But generally speaking, when outcomes are driven by need, it's not driven by it's not driven by thoughts. It's driven by the reality of the circumstance, and if you need cash in hand, you're going to do what's required to get cash in hand.
Okay, reasonable.
Yeah.
And the main thing that I took from what you're saying here is that nothing is necessarily set in stone at this point. It still has a further ways to go for the process to be approved. And it's what would have happened so far is a consideration for their needs, a review of all the options, and a decision to go down the path that they believe is able to fulfill the need that they have.
Absolutely.
All right. So I want to kind of so we narrowed it down to equity versus debt just now. Kind of want to bring the conversation a little bit more specific now in terms of when a company is trying to decide on what to do, because we have a sort of kind of discussion in our local market about an APO versus a rights issue after our company is listed. What specifically would you say? I don't necessarily want to use the word pros and cons, because ultimately the pro for the company is them being able to raise the capital that they want, right? But for the purposes of us trying to decide, if we're trying to decide between rights issue or APO, what are some of the considerations then for both, and what would be like a key determining factor for success for both options?
Well, I think success of both options, as far as it comes, is really were the funds raised or not.
Yeah.
I mean, really, that's the ultimate arbiter in the end. I mean, of course, how well or the funds deployed according to the timelines that the companies had identified. Because of this nature, there should be some specific things stated at the outset where the business can be held accountable by onlookers, stakeholders, even the shareholders who would have taken the plunge with them. So there should be a clear use of proceeds outlined, etc. A business case should be made. I think as far as either the two, I think both serve a purpose and both are determined, in my view, by the presence of an anchor investor. Because in the end, if you have a rights issue and you have one dominant shareholder, if that shareholder doesn't want to participate, then they'd have a ton of rights. Chances are that they'd have to renounce to somebody, and it can only be renounced to somebody if that player exists. I mean, it makes it very easy to do in the sense that if one identifies a player and then can execute accordingly, then you don't really have to sell the instrument per se. However, there are instances where you would have to sell it before the offer, because you'd have to go and try and find necessary persons or the owner of the business or the predominant owner may have identified somebody or been approached and said, yes, I want to give you access to this company, and I'm willing to part with 20% via rights issue. And a broker would come to the table and say, well, we can execute for you. Okay. In a case like 138, where there's no one party owning 50%, is perhaps a bit more difficult, because, and this is in the instance where none of the major shareholders want to invest to that extent. And then again, you have to be sure that people are going to want to renounce their rights if you do have it being that widely owned. Now, there's two schools of thought. One can say, well, a company is narrowly held, so my chances of making some money are greater because of the scarcity effect, right? And then somebody could say on the other hand that it's not widely held, so it's going to be determined by the market's perception of it. I think either the two is fine. I think something with a wide market appeal is better in my view, primarily because I believe in the free market and the movement according to shareholder desires driven by performance. I think that's the only thing we can really hold to. Because if it's just price movement alone, I mean, we've seen companies that have no value move off speculation. Again, nothing wrong with that, but one can't exactly come and rationalize it to say, well, it moved because it tripled in value, but the business has not tripled in value, but the share price has. That the downside of things like that are things like Enron, etc. So it's we try to go off fundamentals, especially at the broker side, because in the end we have to give a rationale for our decisions and courses of action. So as I said, success determined by the funds raised. Which of the two is determined by the availability of investors, really. If an APO comes and the concerns dilution, I think if the holder is able to matches what the investment is or invest in line with the funds being raised relative to the shareholder base as it exists, would maintain their percentage. And if not, they would probably just be a smaller shareholder in a larger company. So it's really down to what persons prefer. I try not to come down too hard on either side of a coin, because as a broker, I have to deal with both sides. Others have the luxury of holding either way, and that's great, because you have those in the market and you have the market. So it is what it is. I think the talking points are good. It makes for a vibrant market.
Okay, so I'm interested, and I know we wanted to keep this conversation particularly brief, but what I've always thought, just from the APOs that I've seen over the last couple of years, Let's say that an APO is selected, for example. I've always wondered if it's not most important, um, what the company does with that money, how they grows, how how they grow, and ultimately the impact to the bottom line, right? Those are things that I think make sense to look at, because I've always been a little wary of being triggered, for lack of a better word, by a term or a word when the context has not been shared. So at this point, as you said, nothing has been fully determined. We haven't seen a prospectus. We're not seeing what a company is planning to do with these funds, what they're intending to do, what the projections are, right? So I always think it comes down to that, because if a company takes capital, grows the business, shows that the business is heading in the right direction, how they choose to raise the funds should be, I think, just a matter of what may be most effective for them, because there is a concern that you go through this process, you're not able to raise the money, then you have to either lengthen that process. And I've actually seen how the market may respond to, if an offer opens and has to be pushed back or delayed for some reason. It kind of gives this idea, well, maybe the market doesn't like it kind of vibe. So I've seen that as well. So I don't know. I know I said a lot there, but is that what it comes down to you? As I think, ultimately what a company does, how they're able to grow, and how do we measure that performance long term?
Right. No, I mean, you measure the performance based on how the business performs, the profitability, and the ratios that profitability brings with it. No question. I mean, I am very big on the bottom line. I'm very big on cash flows, and depending on the nature of the company, the balance sheet, and blah blah blah. So it absolutely comes down to that. I think
Yeah.
I'm wary of speaking in the offers past, not because of the offers themselves,
Yeah,
because
man.
they
I
are what they
understand
are.
that.
They are good businesses. I think, however, I have my own take on how some offers may have been presented to the market. I think there may have been, in some instances, less clarity on what the funds would be used for, or what shareholders could expect.
Mhm.
But it was also a time where there was capital in abundance, and some firms in need of capital would have taken advantage of that.
Yeah.
At the end of the day, this is still about student housing. It's not as sexy as, I don't know, I mean, the hot shot finance company, or a hot shot food business with with 10 new products or whatever. The student housing, it is really for a stable return on investment, and that is a high payout of dividends, and a high payout of profitability as dividends. And they have been very consistent with regard to that objective. So being specific to 138, should that materialize, that will be communicated very clearly, that if this matches your objective, then it's for you.
Yeah.
I am willing to bet that a lot of the commentary is coming from persons who are not shareholders in the company, which is okay. But it would also say that it would be like me saying, I don't like the way a particular truck is. I'm not in the market for trucks. So, I mean, it's
Yeah.
you
I
hear the
mean, so
comment.
there's nothing wrong, I think, on commenting. I mean, talking about benefits, etc. I for one think that's fine. I think I've always been concerned with just ensuring that context is what's discussed. Not looking at things in a blanket way, like it can't all be bad. Because I remember a time when bonds weren't the best thing, and so I mean it all matters. Like the environment we're in, what circumstances the company are facing, seeking to raise the capital, what's the state of the market, things of that nature. So I think they all feed into the context of what needs to be done at that point. So based on where they are right now, what are the next steps that we can expect to come, right? We know there's an EGM coming up. Is it simply a voting and then we expect our prospectus from there? If let's say there is not a consensus, is it back to the drawing board and we do some more discussions? What can persons expect to hear next?
Well, I think you hear the outcome of the EGM, whether positive or negative. I don't think you should expect a prospectus for now. The plan and the roadmap has been well thought out and established, and subject to execution of particular things, then a prospectus would follow. What we did not want, or what I don't think any player wanted, was for this to be contemplated and the market not made aware very early.
Yeah.
It's a very good business. It's not necessarily a rush per se, because let's face it, we know there's a sensitization regarding the business that's required for the market, because I know the shareholder base is not a wide base, and because of that, you need to have the time to be able to speak to the necessary persons to get an idea of where they fall, and then thereafter, you do what you have to do, which is standard when you're running a book, So
yeah,
really, I think the outcome will be there, but I can't tell you not to expect a prospectus in short order. There's a lot more that would have to happen between now and then, but at least the market would know that it is being considered actively, and if approved,
then the necessary
to bring
steps.
to bring it to the fore. But for now, disclosure was made because we didn't want to run the risk of it being leaked, and then we run afoul. We in a transaction, we do anything we're involved in, we try to disclose it very quickly, especially if it involves a public business, because you know how it is. The more people know about something, the greater the likelihood that it can get out before you would like it to. So I think, yeah. So I mean, listen, I think they have a quarter that ends the end of March, and we're out the March 7th. So really and truly, we wouldn't be able to do anything, just to give a clue, before the next set of numbers are out, which is in the middle of May. So then you start to dial back from there. So it could be whenever, summer, before school. I mean, that's just a thinking. But I think when you're doing deals, there's a certain finesse that's required to objective. And we took on an opportunity that we were very excited about. It's not a popular business, but sometimes the most money is made in the opportunities that aren't popular. I think back to the JPS 9.5% preference share.
Have you seen the JPS 7% has been up like 4,000% since January? It was 64 cents. Now it's $50.
No, I didn't notice. I don't know if it's been trading heavily, because if it doesn't, if I don't have a market for it in terms of large amounts, it would just miss me. What I can tell you,
it's mega volumes, like 20 units, 100 units. Those are the volume that is being traded. But it's been crazy. In the last month alone, over 3,000%. So
I see it trading. I never understood. I didn't pay any attention to it, But those things sometimes, make money at scale, but it's not the subject of dialogue. But in the end of the day, it's JPS. So we know light and power is going nowhere, and they're still a monopoly for the time being. Well, technical monopoly. And so, as I said, 9.5% from 10 US to 20 US, it pays dividends indexed to the 10-day moving average on the US.
Yeah.
And now they're settling to a pattern of paying quarterly now. And I mean, as I say, in US dollar terms, the return on average over 6 years is 16%. In US terms, for 6 years annualized, which is pretty good for a conservative placement. So, I think we'll see. As I said before, we're very, very, very eager to bring this to the market, but we're going to take our time. We do have some other announcements that will be with
I was actually just going to ask you that, because we're pretty much wrapping up here, and I'm not seeing any questions, which means I think likely the questions may come, I guess, after things are confirmed. But for everyone watching, if you do have any questions, please type them right now, because we're pretty much about to close out here. But Ryan, is there anything that is coming up that you're able to share about, or at least can give us an idea as to when we can expect to hear something?
I think your community will get some word, should get some word of transaction disclosed, I would say within a week or within 2 weeks maximum.
Okay.
That should involve it will actually a multi-jurisdictional transaction that you would see the first stage of, and then there'll be other stages to follow. One piece of it in the end would be an IPO. We'll be announcing another relationship formed for another IPO. There's one IPO that was announced. We didn't announce it, but I think that should be next year. I think if persons remember, they can cast their mind back to it. And I'm just thinking. So IPO. It's 2 next year, 1 this year. APO working on, and I mean, we have some stock trades. I have some stock trades working on, again, of substance. But these things go like, one I've been working on one for a number of years. I think it could come together in April. We'll see. A little blessings. We could expect that to close. And again, that would be really disruptive in the sense that it would signal to the market great confidence. And I mean, this is involving 2 listed companies. And, again, it speaks to just the enterprising spirit that abounds in Jamaica. There's just a measure of confidence despite global headwinds and uncertainty, where Jamaican players are looking to strengthen their footing in the market, because it just feels like a better bang for the buck than taking the money and placing it in Miami or New York or Delaware, So, as I said before, a lot of the work I do, apart from with individual clients, which is not that many, involves listed businesses. And sometimes, you just find the what's the word I'm looking for? The most unique type opportunities come up out of nowhere. So I'm actually not even Jamaica now, but I get back soon enough, and I think in short order we should have, be able to share some more details of that. But very, very exciting times, I can tell you.
Great. Well, congratulations in advance. We have seen, I'd like to say, quality offers from the team. So, great work there. And looking forward to the updates as they come. And, I know that we're scheduled to have another conversation once everything, runs its course. So we'll post that out to our community when that is confirmed. Thank you, Ryan. I don't see any questions, and I know we wanted to keep this one, as I said, within a certain time. So thank you so much for the opportunity. Thank you for the insights. I know that you've shared a lot. Hopefully persons are able to see, I know what to expect there. So thank you so much.
My pleasure. best, keep up the good work, and once this EGM is passed, I think we should be able to speak again within and maybe, who knows, maybe there may be more to discuss as well around that time. So let's see.
Yeah. All right, great. Thank you.
All right, thanks for having me. Great stuff. Cool, Jeremy.
All right, guys. Hopefully that was helpful. It was meant to be a short conversation with Ryan. He did have a hard stop, so we decided to cut it at. It was supposed to be 7, went a little over, and we wanted to just kind of give just a little bit of a context around the press release for 138. The EGM is coming up, so we're scheduled to have another conversation then. And then at that point, I think we can have a fulsome conversation. There were certain aspects that we weren't able to discuss until things have taken their course. So, let me know if you have any questions out of this. I did want to spend a little bit of time going through and just looking at some of the news on 138 while we're here, right? So I'm going to share my screen again. This is how the company has been, performing for the last 6 months. So we see where in November, it was at a low of 409, and we're seeing it traded today at 549. I want to track, just some of the news coming out for the company. So let's see here. So we had, okay, so I'm going back just a little because Ryan mentioned the dividend. So the dividend is here on December 31st at 13 cents per share. So it says interim dividend. Let's look at this. So advisors at the company we met do a dividend of 13 cents per share. Close of business. So this has already been paid. And then moving down, we'll look at the financials another time. I don't think we want to get into that now. But the consideration for APO was February 9th. So I wanted to just look at, well, that's a month ago, right? So February 9th would have seen the announcement on this day. We saw it go to a low of about 452, and then a month later it's pretty much around 550. So before the APO announcement, it was 572. Now it's around 550. So that's what would have happened in the last month or so. Units outstanding is 414 million. So I guess if based on how they decide to raise funds, if it is in fact an APO, this number will definitely increase. So it's just for us to see more information. I don't like to speak about things that aren't confirmed. So we'll wait to see more there. The year to date up almost 10%. And this is how they've been doing. So let me see their most recent financials would have been year ended September 2022. Let's check that out quickly. I guess what I want to see is their levels of profitability. I have not looked at this company in terms of a stock review. I don't remember why I would have needed to look on them. I don't know, but I wish these graphics were a lot better. Apologies for that. Maybe it was scanned, who knows. I'm just really interested in their income statement right now because we're not doing a full review. All right, so again, sorry about the blurriness. It's how the results would have been uploaded. So for 2022, an EPS of 77 cents. That's actually higher than it's been in a long time. Net profit here, 318 million as opposed to 22 million in 2019. So that's actually pretty good. Profit before tax, admin expenses, 501 million, and revenue would have been almost 1.2 billion, right? So they seem to have, I like to call these 2 years, well, I like to consider the last 2 years either, it's not that I'm not counting it, but I think things would be skewed for the last 2 years. So I tend to be leaning towards 2019, of course, taking the last 2 years within context, depending on the type of company, and then looking at how the last year would have been since, everything would have went quote unquote back to normal 2022 March. So, this is pretty good. So we'll say a dividend was paid, and so we definitely will go through this company a little bit more. But I just wanted to share that here for everybody's benefit. All right. So, hope you enjoyed this brief video. I hope it was informative. Let me know if you have any questions. Again, take note of what Ryan said. We do have some announcements coming up. So if we have the opportunity to feature those, we will. If not, we'll just share it in our group as per usual. The link is in our description to join our community groups. Remember, we have the L.E.A.R.N. Grow Invest Academy now, where you can check out courses that are coming up. We have the Stocks for Beginners course coming out soon. We have the Grow Your Wealth conference that you can purchase. The recording, that's the conference we had in December. And we just want to encourage you to follow us on our platforms. Subscribe to the channel if you are a new person, and we welcome you to just actively take part in our community. So thank you for watching, and I'll see you in the very next video.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N. Grow Invest.